Hey guys, welcome back to the channel. Today I have one that I'm excited about. It's fairly new, but then again it's not new. What am I talking about? Stick around and let's find out. So I'm always about those monthly payers, those high yielders. This one is no exception, but it's new. So it's kind of like one of those where you probably want to put it on the back burner for a minute just to see how it works. You see what I'm saying? It being brand new, especially with an income fund, you want a little bit of a history, right? You at least want to see that it's going to be consistent with what it plans to do. With that being said, if you're new here, please give me a like, share, subscribe. If you haven't checked out my other videos, I got a bunch of videos on ETFs and funds that provide current income, high yield current income. I try not to push dangerous high yield, but there's a big difference between being an income investor and a dividend investor. And if you're looking for income, you have to be very careful with the funds that you go after, right? So we're gonna go over this a little bit today. And there's not a lot of history here, so I'm just going to give you an overview, and we'll get you put it on your watch list, and I'll do some reviews and updates as the months go by and income gets paid out on this thing. Okay, so what are we looking at? We are looking at the JP Morgan Chase JEPI Equity Premium Income ETF. JEPI. And we're just going to go over and look at, if you look at this 30-day yield, you're looking at 11.85%. 11.85%. So let's go over the overview here. Generates income through a combination of selling options and investing in U.S. large cap stocks, seeking to deliver a monthly income stream from associated option premiums and stock dividends. So it constructs a diversified, low volatility equity portfolio through a proprietary research process designed to identify over and undervalued stocks with attractive risk return characteristics. And it also seeks to deliver a significant portion of the returns associated with the S&P 500 index with less volatility in addition to monthly income. So we'll go down and look at here the portfolio managers. We have Hamilton Reiner. We click on his name. Was it going to give me anything? It will. 11 years with JP Morgan, 33 years in the industry. He has been managing U.S. equities and U.S. derivatives since 1987 at firms such as Barclays Capital, Lehman Brothers, and Deutsche Bank. He started his career at the options investing firm O'Connor and Associates, where he developed his passion for derivatives investing. Hamilton obtained a BSc in finance from the Wharton School of the University of Pennsylvania. Who's the other guy? Raphael Zingone. See if we get some info on Raphael here. He's a CFA, head of the U.S. Structured Equity Group, an employee since 1991. Ralph is responsible for the management of a range of large cap structured equity portfolios. So he was a research analyst following the aerospace, environmental, and diversified manufacturing sectors. Upon joining the firm, he was a quantitative equity analyst and later served as a U.S. equity portfolio manager in London and New York. 29 years with JP Morgan, 29 years in the industry. That's a good sign. Now, so if you look at it, Hamilton runs the options plays and Raphael assembles the portfolio. So even though, this fund is relatively new, they don't have new people running it. So that's a good thing. So the fund inception date, May 20th, 2020. Currently has a net asset value of $50.84 as of July 9th. And did I gloss over the expense ratio? It has 105 holdings. Let's see, where is it at? There it is. Has a very respectable 0.35% expense ratio. That's really respectable for an actively managed ETF. It really is. Let's see what else we got here. This is the price fluctuations since inception of May 20th. So it had an inception price of $50. And it fluctuated quite a bit here, but I mean, this chart looks funny, but it's really not that big of a deal because it went from 50 to 51.44 back down to $50.13 back down. So its low was 49.71 and its high was 51.32. So not very much movement, but we don't have a whole lot of history here. That's what I just went over. Performance and fees. So performance of 1 month, market price, you're down 0.49%. That's pretty much all you got. So since inception, 1.54%, but that's, you're only talking, what is that, 6 or 7 weeks, maybe 8 weeks. And it has paid 1 dividend already, and it was X date was July 1st. It's going to pay, it paid a couple days ago on July 7th, and it paid 49.408 cents per share at the $50 price basically. So pretty much a 10%, 1%. That would make it a 12% roughly annual yield. Now, when I said this fund was relatively new, this fund actually existed prior to the ETF, but it existed as a mutual fund. And I found it was under JEPIX, but there isn't a whole lot of information about it. The one piece of information, the couple pieces of information was it had a 1.13% expense ratio. They had a waiver of expenses to bring it down to 0.6%. There was a $49.95 transaction fee to even buy into it. And it had a minimum to invest of $1 million. So that pretty much counts all of us out. For the most part, I'm sure there's a couple of us out here that probably afford that, but the everyday Joe, we wouldn't have access to this. So JP Morgan decided to make this into an ETF, and I think this can gain traction. But like I said, I wouldn't jump right into it. I want to see some performance. With it being options based, this price isn't going to run away from you. It's an income fund, so there will be some growth here because they're not selling in the money cover calls. They're trying to have growth and income. So if we look at the portfolio of JEPI, that's just a funny name, JEPI. Take a look at JEPI here. It is actively managed. And if we look, we have 76% in North America, so 70. It doesn't show the whole 100. Where's everything else? Oh, I see what they're doing. So it's 76% United States, under 2% UK, 1.5% in Ireland, under 1% in Germany. The top 10 represents 32% of the portfolio. And here's why. It's 19.49% in cash. So this is probably going to be a common thing with this ETF, because when you sell call options or any sort of options, when you sell them, you collect the money in cash. So it's going to have a cash position that will, most likely be paid out to you as a shareholder. But what is the stock portfolio? So it's got Amazon, Microsoft, Accenture, AbbVie, Apple, Eli Lilly, Alphabet, Honeywell, Pepsi as the top 10. Pretty strong companies at the top 10. 74.26% in large cap, 19.49% in other, that is the cash position. 5% in mid cap, 1.2% in small cap. And the Morningstar style map has this as a large cap blend. So we'll see down here the sector exposure. You have information technology at just under 13, healthcare at just under 12, consumer staples at just under 12, financials just a little bit above 9, industrials about 8.5, consumer discretionary a little over 7, communications a little over 7, utilities about 6.5, materials at about 2.5, real estate at about 2%, and about 2/3% in energy. So, like I've said before, I'm going to repeat it. You're probably tired of me repeating myself. I am going to stay on the sideline on this one for a little bit. I'm going to watch it for the next couple of payments and see how well it does and how good they are at producing income. And I will do some update videos on JEPI and see how it goes. So I'd say put this one on your watch list if you're an income investor. It looks promising. Almost a 12% yield, high quality companies, good management, and a low expense ratio for an actively managed ETF. This could be a winner. If you like this video, leave me a comment down below, like, share, subscribe, do all that good stuff. You guys have a great day, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.